Welcome everybody to a special FOMC minute stream. Federal funds rate coming up here. We'll see what happens. It's gonna be highly volatile. Stocks, the pairs didn't really do much. I guess it's waiting for right now. Let's get started. Quick update. USD CAD trade hit this target over here, but damn, that was quick. I got out. 4 pips profit. I'm gonna risk some of that on this trade. So I did take a mini short position at 1961. That's because I feel like with the Fed announcement, they're gonna hype up the market, causing a sell-off here, and then it'll probably push back up. But again, I do feel like it's priced into this right now. Whatever the Fed is gonna say, whatever Jerome Powell is gonna say, we'll keep an eye on this. For sure, we'll keep an eye on this. Got Forex Factory here too. We'll keep that out here. Go back to this screen. Hope everyone traded safe. There was obviously not a lot of moves since the morning. I think it's setting up for the federal funds rate coming up here in a bit. Give me a moment. I gotta edit something. I'm gonna turn the volume down a little bit. Whoops. But yeah, if you caught the USD CAD trade, did work out. There was some lessons in it for sure. Biggest thing was just waiting for a pullback, not chasing the trade, right? I think I was chasing it, but if I waited and got it at like the 40s levels or even 50s, that would have been a 20 pip trade right there, right? But it is what it is. Got another page done on the website. Might as well pull that up while we wait. 3 minutes. Education. Chan has asset classes done. He said he'll put it up later. Trading basics. First part accomplished. Got 2 more to do. About us. I can figure it out, but I guess side by side, it's actually pretty nice. Not bad at all. I kind of like it. So I'll leave that there for now. Honestly, let's see if I can find a CNBC live stream. Videos, no, they don't have a live stream. Oh, I found the press conference stream. I'll pull that up in a bit. Leave that from the Federal Reserve website, or YouTube channel. Can link that in a bit, but what, we got like 2 minutes left. My stop is gonna be 1964, I think. Yeah, 1964. Just risking some of the profits that we had earlier. Nothing too crazy. One trade I'm looking at though is USD CAD. If it does start popping up, then I still have my arrows there, like especially if it breaks the 75 level. start entering, but I do feel like we're gonna get like a little pull down, mini liquidity grab, and then a continued rise up. We'll see how that turns out. Yeah, no, I think everything's lined up. Should be a good session. I wonder if Chan's doing. Uh, 25 seconds, eh? Not bad, not bad. Ten seconds. Ooh, exciting. Let's go to gold. Gold usually has a big move in that. Sorry, I'm eating my lunch too while we're at it. Pretty sure nothing's changed. Biggest thing is gonna be the press conference. So we'll see how that goes. Could you imagine if they made this 0? That'd be crazy. Negative rates. Guess the fund rates ain't gonna be big. It's a statement and the press conference that's gonna move it. So we might have to wait another 30 minutes, but it is what it is. At the mini position there, it has a dollar index reacting, dollar index going down a little bit. USD CAD's dropping. We shall see. Be patient, everybody. Oh, there goes gold. There goes gold. Oh, wow. Wow. There it comes. It's flowing into the market right now. Wow. Honestly, lessons from June 10th. I remember trading that day. You gotta wait. Just wait. And wait. And wait even more. I got 254. Pretty big, goddamn. The biggest thing is I didn't risk a lot here. I'm saying it's I think about 15% of my max position. Otherwise, I might stop at 1965, risking only the profits on the 4 pips I got this morning on my trade. So my risk was controlled. I really like that. Yeah, no, I think I'm gonna wait 5 more minutes. I think anything above this level, so 63 up into the 64, 65 range is going to be a buy to test the highs and potentially hit 2K, potentially. But I also feel like considering gold's run up, this move right here is the Federal Reserve, and that's pricing its statement into gold right now and over the past 2 weeks. So eventually, sooner or later, we're going to see a little drop off, a little sell off. Overall, long term, it will be buys. Patience is a virtue. Damn, look at that. Look, that's just indecision on the 5-minute. It's crazy. Crazy volatility, if you ask me. You don't want to go on a big position size on these trades, as it is news related. Never do that. Always go a small position. FOMC statement. Let's check that out. The biggest thing is going to be, give me a moment, let me pull up the stream. So it's going to be this FOMC press conference. That's going to be the biggest thing. I think a lot of people are waiting to watch it. 2,000 people. So we're going to see what Powell says. Here's the statement. Ooh, gold shot up. Stop hasn't been hit yet. I'm going to wait. I'm not going to actually enter in it. I think I'm going to wait. If my stop gets hit, it gets hit. Right? But then I won't really force any trades after. That move down was probably just a liquidity grab. Now I'm looking at it. I'm not going to chase a long. I feel like that's a stupid trade if I chase a long. Maybe if the 15-minute forms above, then I'll go long, especially if it hits my stop at 1965. That would be a point where I go long, but let's say it has a wick like this on the 15-minute. So I guess how long do we have to wait now? 9 minutes. I mean, there's still time. Infinite stimulus. That's basically what that article is saying. Infinite stimulus. Ooh, wow. Yeah, if silver shoots up too. Yeah, that was right. That's the exact sound it'll make as it just blows through the resistance. If silver shoots up. But I mean, we're waiting. We are waiting. Overall, it is bullish. We've had this huge run up on both metals. So yeah. But look at the volatility on this. About 100 pips on news. That's just insane. I would never have bought it here with the way that the candlestick was forming. There's no way I would have bought it there. No way, Jose. Still waiting for this one. If this one, let's say, breaks support, if it comes back up, oh, buddy, I'm going to be long in this. Keep this on the watch list, too. Damn, dollar is tanking. Dollar is tanking. Infinite stimulus, ladies and gentlemen. That's what the Fed is going to do. Got 20 minutes till FOMC. I'm gonna finish my lunch. I'm gonna mute for a sec. Quick update, my stop got hit. Yeah, I got it. Got hit very nicely. But it is what it is. I had a plan. I had a risk control. I executed. Now considering it broke that level, yeah, we're gonna see a push further. Just tell you guys that much. Am I gonna enter? Maybe on the pullback on the next 15 minute. But like I said, it really depends what the Fed says. Dollar is tanking, so I guess infinite stimulus, more inflation, erosion of the US dollar, making the US dollar weaker. Simple economics and fundamentals that will be discussed in our trading basics section of the website. But yeah, no, I think it's just watching. Wow. What that resistance break? Probably gonna test the highs. And if we shoot through the highs, we're going to 2K. Silver too. Wowie, silver. Ooh, wowie, gold. Goddamn. Maybe they just took profits on that little sell off that gold had. But if silver starts breaking levels, yeah, look at that clean traffic. 40 cents. That is a pretty big move. If it happens. Looking at that. Looking at USD CAD. So USD CAD breaks below the support. Trade ideas invalid. Which starts coming back up. Then yeah, got my arrows lined up. It could be like easily 100 pip trade, possibly, potentially. We'll see how that turns out. Silver, I might take a small long here. Actually, it hasn't really followed gold yet, so I think yeah, I just took a long 36. It's my entry. Give me 1 second. Sorry, I was just checking something. Yeah, I mean, with that liquidity grab and the bullish move up on gold, I expect silver to follow. Look at that clean break of the resistance level. So with that clean break of the resistance level, we should see, in theory, a continuation upwards. That's one thing I am expecting. Yeah, it hit 68 right now. Wow, did it hit 68? Did it hit 68? Damn. It's about to go rocket ship. Did get my position on silver, so you know what? We'll draw the rocket ship here. On silver, hopefully it follows in gold's footsteps, right? It's usually what commodities do, or I mean metals follow in gold's footsteps. A little bit slower, but they still follow. Where the hell is the rocket ship? Been a while since I've drawn on this. Oh, there it is. Rocket ship. Get the little moon up here. And let's paint something. Whoops. That one wasn't good. Oh yeah, we're having takeoff soon. Especially if it starts breaking highs, literally 25, 40 could be like a good target point. Clean traffic to the left. All it needs is to break up. I guess it depends what the Fed says too. So I think that's in like 15 minutes. But now we can look at the 15-minute candle closes. 15-minute bullish, but the real one is this gold 15-minute. Damn, that is really bullish. So yeah, this one should continue too. If it does pop up, I'm gonna put stops at break even right away. I don't want to risk too much of it. So see how that goes. Target 2540s area, so I'll just put that there. That little resistance area. I think it does hit the highs again. But obviously we'll have to wait and see on that. Zoom in a bit. Why is this crooked? Oh, I guess you're going to the moon anyways. Never mind, rocket ship failed. Houston, we have a problem. Fuck. Is there still indecision? No break above this level, conventional wisdom would have it going into the highs on gold. Should I trust conventional wisdom? Tough call. Tough call. Pretty slow Fed news, to be honest. Usually within the hour, like half hour, you get to push up. How's the US market reacting? US 30 hasn't done much either. Maybe it's waiting for Powell to talk. I feel like that's the most reasonable. guess right now. So we'll see. I'll be right back though. I'm back. I'm gonna 9 more minutes. Okay. Where's my thing at? There we go. Still not doing much, eh? There we go. There's the push. Small push. Still a push, nonetheless. Let's see, that 15-minute could be a liquidity grab to push higher. Retest the highs potentially. Silver, I honestly feel better about silver than anything else. Typically, Fed announcement has this liquidity wick down and then push up on gold, and then silver usually follows. I've seen that a lot over the past few months. But yeah, silver has clean traffic to the left. Like, holy, that's clean. This might be held well into Asian session too, but we'll see. I need to put stops to break even, obviously. Okay, but let's say it breaks. Let's say it breaks 70, 80. So like, it's a 15-minute. Let's go the hour. Honestly, 2 zones. Breaks this zone. Breaks this zone. Breaks these 2 zones. This rocket ship is going clean traffic to 25.40. Retest the highest potential. Daily wick fill. Oh, I need to remove John. I'm gonna remove Johnny so quick. Potential daily wick fill. Never know. That was a 4-hour look. 4 hour looks pretty good. That 4 hour looks even better, but look at clean traffic is what I'm trying to say. That's the biggest thing right now is the clean traffic towards the left that we have. This one, probably just a wick fill. I don't know. We'll have to wait and see. Got 6 minutes till Fed Powell. Damn, it is slow. Guess we gotta wait 2 minutes. Is this on yet? I'm gonna turn off the background music. I'll have that for our outro when we get to there. Hey, go flow. I agree. I just saw your messages, and I am waiting it out till the first minute of the speech. I feel like that'll push the price of gold or any metals up or down. So we're gonna see what Powell says. Really, I was just comparing it to before too. What happened on June 10th? Yeah, let me go to 30-minute. I remember this day we were trading it. Yeah, you see this little push down on the 30-minute, and then you got the continuation after. But the 30-minute at 12 o'clock broke the resistance, continued going up, and reached certain levels. So that's one thing I'm expecting too. So we'll wait and see with that. Damn, is this starting? Should be starting in like a minute actually. So we'll get back to that in a minute. I'll pop this chat. Yeah, there we go. That's much better. There he is. There's Powell. Good old Powell.
The pandemic continues to cause tremendous human and economic hardship here in the United States and around the world. The most important response to this public health crisis has come from our healthcare workers, and we remain grateful to them and to the many other essential workers for putting themselves at risk day after day in service to others and to our country. All of us have a role to play in our nation's response to the pandemic. At the Federal Reserve, we remain committed to using our tools to do what we can, and for as long as it takes, to provide some relief and stability.
That means unlimited stimulus.
That the recovery will be as strong as possible, and to limit lasting damage to the economy. In recent months, economic activity picked up as the economy began to reopen. Many businesses opened their doors, factories restarted production, and more people left their homes to engage in various activities. As a result, household spending looks to have recovered about half of its earlier decline, although spending for services such as air travel and hotels has shown much less of a pickup. The recovery in household spending also likely owes to federal stimulus payments and expanded unemployment benefits, which provided substantial and timely support to household incomes. In contrast, indicators of business fixed investment have yet to show a recovery. Even with the improved economic news in May and June, overall activity remains well below its level before the pandemic, and the contraction in real GDP in the second quarter will likely be the largest on record. The labor market has followed a similar pattern. After precipitous drops in March and April, employment rose strongly in May and June, as many people returned to work from temporary layoffs. As a result of the roughly 22 million jobs that had been lost, about 1/3 had been regained as of the June payroll report. The unemployment rate declined in May and June, but at 11.1% remains far above its level before the outbreak and greater than the peak during the global financial crisis. In addition, the downturn has not fallen equally on all Americans, and those least able to bear the burden have been the most affected. In particular, the rise in joblessness has been especially severe for lower-wage workers, for women, and for African Americans and Hispanics. This reversal of economic fortune has upended many lives and created great uncertainty about the future. The pandemic has also left a significant imprint on inflation. For some goods, including food, supply constraints have led to notably higher prices, adding to the burden for those struggling with lost income. More broadly, however, weaker demand, especially in sectors such as travel and hospitality, that have been most affected by the pandemic, has held down consumer prices, and overall inflation is running well below our symmetric 2% objective. Along with the recent increases in economic activity have come new challenges. After declining gradually from a peak near the end of April, the number of COVID-19 cases has increased sharply in many parts of the country since mid-June.
US
We have
almost
thus
at 5
entered a
million.
new phase in containing the virus, which is essential to protect both our health and our economy. As we have emphasized throughout the pandemic, the path forward for the economy is extraordinarily uncertain and will depend in large part on our success in keeping the virus in check. Indeed, we have seen some signs in recent weeks that the increase in virus cases and the renewed measures to control it are starting to weigh on economic activity. For example, some measures of consumer spending based on debit card and credit card use have moved down since late June, while recent labor market indicators point to a slowing in job growth, especially among smaller businesses. A full recovery is unlikely until people are confident that it's safe to re-engage in a broad range of activities. The path forward will also depend on policy actions taken at all levels of government to provide relief and to support the recovery for as long as needed. The Federal Reserve's response to this crisis has been guided by our mandate to promote maximum employment and stable prices for the American people, along with our responsibilities to promote the stability of the financial system. We are committed to using our full range of tools to support the economy in this challenging time.
It's a fancy red
We
button.
have held our policy rate near zero since mid-March
Sorry, I
and
had to
have
add that
stated
in.
that we will keep it there until we are confident that the economy has weathered recent events and is on track to achieve our maximum employment and price stability goals. We've been purchasing sizable quantities of Treasury and agency mortgage-backed securities in order to support orderly conditions in the markets, which are vital to the flow of credit in the economy. To sustain smooth market functioning and foster effective transmission of monetary policy to broader financial conditions, we will continue to increase our holdings of Treasury and agency mortgage-backed securities at least at the current pace. These purchases are also fostering more accommodative financial conditions. The Federal Reserve has also been taking broad and forceful actions to more directly support the flow of credit in the economy for households, for businesses large and small, and for state and local governments. Without access to credit, families could be forced to cut back on necessities or even lose their homes. Businesses could be forced to downsize or close, resulting in further job losses and income losses and worsening the downturn. Preserving the flow of credit is thus essential for mitigating the damage to the economy and promoting the recovery. Many of our programs rely on emergency lending powers that require the support of the Treasury Department and are available only in very unusual circumstances, such as those we find ourselves in today. These programs benefit the economy by providing financing where it is not otherwise available.
Damn.
In addition, by serving as a backstop to key credit markets, the programs appear to have significantly increased the extension of credit from private lenders. We are deploying these lending powers to an unprecedented extent, enabled in large part by financial backing and support from Congress and the Treasury. We will continue to use these powers until we are confident that we are solidly on the road to recovery. This week, we extended these programs through the end of the year. When the time comes, after the crisis has passed, we will put these emergency tools back in the toolbox. As I have emphasized before, these are lending powers, not spending powers. The Fed cannot grant money to particular beneficiaries. We can only create programs or facilities with broad-based eligibility to make loans to solvent entities with the expectation that the loans will be repaid. Many borrowers will benefit from these programs, as will the overall economy. But for many others, getting a loan that may be difficult to repay may not be the answer. In these cases, direct fiscal support may be needed. Elected officials have the power to tax and spend and to make decisions about where we as a society should direct our collective resources. The fiscal policy actions that have been taken thus far have made a critical difference to families, businesses, and communities across the country. Even so, the current economic downturn is the most severe in our lifetimes. It will take a while to get back to the levels of economic activity and employment that prevailed
Rocket ship.
at the beginning of the year,
We have to take off.
and it will take continued
Let's go
support
back here. Sorry.
from both monetary and fiscal policy to achieve that. Before taking your questions, I'll provide an update on our review of our monetary policy framework. Excuse me. As a reminder, we began this public review of our monetary policy strategy, tools, and communication practices, a first for the Federal Reserve, early last year. Our purpose has been to take a comprehensive look at how we can best meet our maximum employment and price stability objectives in the years ahead, particularly in light of the generally lower level of interest rates around the world. As is evident in our current situation, the lower level of interest rates has reduced the scope for the committee to support the economy by cutting interest rates. Our plans to conclude this review were, like so many things, delayed by the pandemic. At this meeting, my colleagues and I resumed our discussions. Our focus was on possible enhancements to our statement on longer-run goals and monetary policy strategy. This document states our goals, articulates our approach to monetary policy, and serves as the foundation for our policy actions. While I do not have any details to share with you today, I am confident that we will continue to make progress and will wrap up our deliberations in the near future. We understand that the work of the Fed touches communities, families, and businesses across the country. Everything we do is in service to our public mission. We are committed to using our full range of tools to support the economy and to help assure that the recovery from this difficult period will be as robust as possible. Thank you. I will look forward to your questions.
James Politi.
Hi there, James Politi with the Financial Times. Chair Powell, the Fed today decided to extend dollar liquidity swap lines with a number of central banks around the world. Why was that important for the Fed? And how concerned are you about dollar shortages persisting over time through the pandemic?
Well, so our dollar swap lines, we introduced those back at the beginning of this episode after the pandemic made itself present. And dollar funding markets were in very difficult shape at the time. And the introduction of the swap lines has really restored dollar funding markets around the world to fairly normal levels of activity. And so they kind of serve
There
their
we go.
purpose.
That's a trade right there, ladies and gentlemen.
We extended them
See how it turns
yesterday
out?
morning, really to facilitate planning by other central banks and just so people will know that those facilities are still there. We want them to remain in place and be available as long as they are needed. And since the crisis and the economic fallout from the pandemic are far from over, we're going to leave those in place for the time being, and we'll leave them in place until we're confident that they're no longer needed. There's nothing that's going on in the market right now that raises any concerns. It's just we want them to be there as a backstop for markets.
Okay, Steve Leisman.
Steve Leisman, CNBC. I hope you can hear me. Mr. Chairman, given you said several times now that you have lending, not spending powers. Given that a lot of the capacity of these programs has not been used and really barely used, do you think that some of this money that has been dedicated by the Treasury to the Federal Reserve should be considered to be used by Congress as direct grants to businesses that are in need right now, or to households, given that Congress is now saying that money is limited and they do not want to pass a very large stimulus bill? Is this money doing the best for the nation as a backstop for Federal Reserve programs that don't seem to be being used all that much right now? Thank you, and I have a follow-up, sir.
So that's really a question for Congress. They appropriated that money and $454 billion for our facilities, and it's really a question for them. So you're right that our facilities have not, we haven't done as much lending as we thought, but in very substantial measure that's because markets started working again fairly soon after we announced the facilities, particularly in the corporate credit facilities, also in the muni space, and also in the.
We can get 12:45. I'm gonna end the stream. We'll look at the 15-minute analysis and then go from there.
We didn't turn out to need.
But yeah, I think it was the Fed speech that really pushed the price up.
On the other hand, it's important that the facilities.
It was
stay
always
in
a
place, and
law.
that's why we
Dollar
extended
is
them,
taking.
yesterday. It's important that they still.
I'm just gonna
stay
keep
in
this
place
position. I'm
until
not gonna
we're,
average up.
very
Kind of want to
confident
hold it.
that
See where it ends
the
up.
turmoil from the pandemic
So
and the
we
economic
shall see
fallout
that. Very
are behind
small
us.
position,
So,
but very, very lucrative. Has to break
I
above
can't really
25.
speak
Yeah.
to what
Well,
Congress should do with it, but it's important that the
I'll wait.
facilities be there and be fully funded in case the needs do arise.
Actually, I'm gonna end this. Put the music back on right here. Put the chat back in. Restore the chat. There we go. Perfect. All right, we back. Very interesting Fed announcement. So it's basically unlimited stimulus. They just press a damn button and they print more money and print more money, and they'll keep doing that until the economy recovers. Put in more debt, eroding the value of the U.S. dollar, and as you can see, it is already priced in. Let's go gold. It's priced into gold. Gold should continue to rise. Gold's gonna hit 2,000 by the end of the week. Pretty sure it will. I mean, it's heading there, new all-time highs. That thing is gonna fly. Means silver is gonna follow. Silver is probably, let me go to the chart. Fill this wick right here. I have a position here. I'll be holding that position. So we'll see how that goes. Yeah, other than that, I mean, it was a pretty solid analysis and trading. I did my sell. That was a liquidity grab. I really, in hindsight, should have just punched out and went long after it broke. Went long after it broke. Keywords there. Before it broke, I would not have took the short here. Hell no. I mean, gold is a buy. You can't short it. And same with silver too. I took silver. It usually follows gold. And I feel like with unlimited stimulus, it's never ending anytime soon. We're probably going to see that. US dollar is going to go down more. Investors are going to flock to safe havens and precious metals such as gold, silver, even Bitcoin. Bitcoin's shooting up. Yeah, no, I think it was a pretty good stream overall. So this is a picture. Stay tuned till tomorrow morning to see the results of it. 2540 is the level I want to get out at. That's where the moon is. Rock ship's taken off from my price at 2436. 2540 is the area I want to take profit at. But other than that, if you liked it, pretty good analysis. Quick Fed stream. Gonna go enjoy the rest of my day as everyone else should too. Don't overtrade, control your risk, and we'll see you guys tomorrow.